What I'm going to do here in this video is actually show you how I trade the markets with simple EMAs, exponential moving average, from top to bottom. So the first thing I like to do is I like to actually look at what I call key levels, supports, and resistance. And simply what these levels are just yesterday's highs and low, also known as previous day high and low. So we're going to drop this off. What I've done here is use the day breakers to separate the trading days. As you can see, starting here from Sunday and Monday, that was Monday's market, Tuesday market, and actively we're into Wednesday's market. And I'm going to show you how to do it. So first thing I like to do is go to, in this particular case, I like to go to Tuesday, and I'll just simply mark off the low of that activity, which is here, and then I'll mark off the high of that activity. So that basically give me the key levels of support and resistance. And how I simply use these is I just gauge the current market to see how they're reacting to this particular levels of market. And as you can see, we're kind of setting above the actual previous day high, which giving me the bullish momentum. I traded gold this morning. We got up to over 100 ticks, and then now I'm in a smaller trade just to see how it plays out. Now I'm going to show you how I use the EMAs. Okay, the first thing, you do have to learn how to read the markets as just market structure, understanding higher highs and higher low. You can actually do some YouTube videos to figure that out, or simply use ChatGPT or some type of AI to actually give you that clarification. Now, what I'm going to do is jot out the multi EMA ribbon session. This is an indicator that I coded to help me visually see the market as well. And mainly what it consists of is 5 EMAs, okay? 5, 13, 50, 200, 800. Just use the EMAs to help me gauge the entry, the take profit, the stop loss, and also the pullback, and also trail trades when I'm in particular profit. All right, so the next thing I like to do is come to my entry market, like the time frame that I'm going to enter the trade out. Most of the time I use 15 minutes, 5 minutes, and sometimes I see myself losing a 1 minute, or if I'm in a long run of trade, I'll even jump to the second charts. But to keep it very simple for you, we're going to stick with the 5 minute for entry time frame. You can also, once again, use the 15 minutes as well. All right. So the first thing I want you to do, as you can see, I jotted out the key levels of support and resistance. Next thing is I want to gauge the EMAs to see if I can find a directional in the actual market. Okay. And heavily what I use are pretty much just three main EMAs here to look for it. And that's the 50, which is the aqua. Then I use um, the 200, which is white. I use these two for direction, okay? So simply put, if the candlesticks, the price action is above these two EMAs, then we're bullish in the market. If it's beneath, then I'm looking for sales in the actual market. I like to use the 1 hour to kind of give me the overall directional as well. So I come here in 1 hour just to see, say, hey, how are the EMAs stacking? As you can see, the price point is above. So I'm looking for bullish momentum. Also, as you can see, the candlestick where we're forming now are just higher highs. So that's basically saying, hey, we're looking for bullish momentum in the market. So in this particular case, I'm only looking for buys within the market. And then what I would simply do is just jump back down to the entry based time frame. We're going to keep it simple, 5 minute time frame. And all I simply do is I look for rejections to the EMAs. Okay. For example, here, if we go back to the market here, starting off on the current day, it gave us multiple entries to get in on the buy. Okay. We had a slight pierce through the actual 50, but if you notice what happened, it just gave us a low of the actual day. And as you can see, this thick blue line here, that just represents the high and low for the current day. I'd like to kind of trail them that way. So that was a low of the day, entry point here, come back down, and it rejects through the actual 50, but slightly went right back above. I would enter on that as well, because looking at that, I would say, hey, even though we rejected through that 50, we did not close beneath the current low of the day. So we entered in the market here, multiple opportunities here, not so much based off the actual moving average, but simply because, once again, we stayed above the current low of the day. We get a rejection here. All right. And it was a nice rejection from the current low of the day. As you can see earlier, we just respecting that mark. And then sometime I'll use like stochastic or RSI to actually gauge the overbought oversold. That actually gave me confirmation as well. Okay, right here on that particular trade. That was multiple entry points based off just the current low of the day right here. Now, once again, all I simply do is look for rejection. Okay, if I see rejections from this 50 mainly, or the 200, then I'm basically just getting into the market. Also looking at market structure, as once again, let's say we look at the low here, reject here, we notice what we had here was a basically higher high. That's a high point, and that's a higher high. That's a higher high. So I'm looking at market structure as well. But mainly that's how I scale the market. I hope you guys got something out from it. So what I can do with these MAs, I can look for my entry, I can look for my take profit, I can look for my stop loss, and believe it or not, I can look for pullbacks in the market. So the entry basically comes from rejections of either EMA or a rejection of the current high or low or a rejection from the previous day high or low. Okay. Trend direction always come from the EMAs. I'm looking at the 1 hour just to see how we align with the actual trend. As you can see, we're bullish in the actual market. So of course I'm buying the actual market here. All right. And then 5 minute, once again, just we looking for entries. Okay. Anything that rejects the 50, I'm getting into the market. And if we could have confluence, I'm most definitely getting in the market. If it lines up with the trend direction overall, I'm riding the wave.